The U.S. Federal Reserve has kept interest rates on hold for the first time since July. Policymakers left the benchmark lending rate unchanged at a range of 3.5% to 3.75% in the first meeting of the year. The decision defied political pressure to lower borrowing costs, with Fed Chair Jerome Powell explaining why he believes the central bank must remain independent.
If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important. And the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
Well, Krishna Guha, Senior Managing Director, Vice Chairman of Equities at Evercore ISI, is joining us now to break down what we got from the U.S. Central Bank. Krishna, I appreciate your time today. So the Fed so far has been described by many market watchers as having a slightly hawkish tilt. They've removed references of downside risks to employment. What is your assessment of the commentary that we got?
So, first of all, the Fed is signaling that they're very comfortable on pause here, and in fact expect that they'll stay in this posture for some time with no urgency to cut rates again. That has given this flavor that it's a somewhat hawkish meeting. I think we do need to qualify that though, because in my read at least, Powell made it quite clear that once the tariff wave of inflation is clearly peaked and is coming off, provided that the underlying inflation picture remains good, which I think it is, then there will potentially be scope to cut rates further at that point, just not now.
Right. And Krishna, Mr. Powell didn't give a whole lot of commentary or insight into the pressure that he's getting from the president, the investigation against him and his colleagues. So now that we know, I mean, in a few months, we're going to have a new Fed chair. How important are the next few months for the Federal Reserve?
Well, they're extremely important. I mean, first of all, Chair Powell and his colleagues still have important judgments to make over the remaining two meetings of his tenure. The judgment at the moment is that the U.S. labor market looks like it's stabilizing, and I agree with that assessment, but they'll still need to watch that side quite carefully, along with, of course, the inflation piece, plenty of tariff pass-through still to come, even though the underlying story on inflation is pretty positive. But as you indicated, the really big questions are about what the Fed is going to look like from June onwards, when the new chair takes over. So there's a host of issues here. First, who's that new chair going to be and how will he conduct himself? Second, will the administration continue to escalate its attacks at the Fed to try to, for instance, make sure that Powell quits as a regular governor when his term as chair is up, which he doesn't have to do? And where will the Supreme Court come out on this Lisa Cook case? Huge questions that will determine the independence and credibility of the Fed going forward.
Yeah, I want to get your thoughts on the dollar, because we heard Treasury Secretary Scott Bessent saying, they have a strong dollar policy, saying they're not going to intervene in the yen. But on the other hand, that's very different from what we heard from the U.S. president yesterday. So what's behind the comments, you think, and where do you see the U.S. dollar headed?
So you're quite right that the Treasury Secretary Bessent is saying something slightly different from what President Trump was saying, and not for the first time, by the way, on the currency. President Trump's instincts seem quite clearly in favor of a weaker dollar to support U.S. manufacturing, to support U.S. exports. Treasury Secretary Bessent, of course, who has a background in financial markets, a lot warier, I think, of the signal that those kind of comments send to the markets, and anxious to make sure that the U.S. administration doesn't inadvertently encourage global investors to reallocate out of the U.S. and U.S. markets, raising the cost of capital for U.S. government and U.S. business. So that's what I think you see is the tension in this public messaging. I'm not arguing that they're fighting about this at all. What I'm saying is I think they focus on different aspects here of the currency question. Now, even in the case of Secretary Bessent authorized the FX rate check that took place in U.S. markets on Friday and was the trigger for the big yen move and the wider weakening of the dollar. So I think that he was fully behind that game. He understood it was a time when they could blow up the yen shorts and move the yen higher against the dollar. I interpret his comments today in favor of a strong dollar as representing some concern that dollar weakness could start running away with itself and trying to put a firm stop to that.
Yeah, and Krishna, before we let you go, just really quickly, you talked about the factors behind the pause that we're seeing from the Federal Reserve, and I'm wondering what could tilt the Fed's balance towards cuts in the near term?
So I think the right way to break it down is as follows. This side of June, which is when the new chair takes over, and inflation will be approximately peaking, the tariff inflation. The Fed will only cut if the labor market weakens by more than they're expecting. They're expecting it to be stabilizing in the current zip code of unemployment. They'll cut again if they see material further weakening in the labor market. From the summer onwards, there is scope to cut if, as we and they expect, underlying inflation continues to look good and the tariff inflation starts to roll off. The only caveat there is if strong US growth were to result in unemployment falling back much faster than they expect, then the Fed might stay on hold or only cut, say, one time. But in the baseline case, I think you're getting 2 cuts from the Fed later this year under new management, and it's still possible you could get to 3.
All right, we'll watch that closely, Krishna. Appreciate it. Krishna Guha there, Senior Managing Director, Vice Chairman of Equities at Evercore ISI.